All right, so itemized deductions. Basically what's happened, oops, stop. Okay. Basically what's happened is if you take a look at our 1040, we've talked about income, all right. Next week we'll talk about adjustments to income, all right. But we've kind of got ourselves to this, hold on one second. I forgot to turn the lights off for you guys so you can see it. All right. So, what's that?
We're just talking about clarity.
It's the best I can do, I'm sorry. I wish I could make it bigger.
That's okay.
Basically, we're at the bottom of page 1 of the 1040. We got adjustments to gross income. All right, so like I said, next week we'll be talking about these adjustments to income, but we've got our gross income. We've talked about credits, you know, the non-refundable or Pac-Man. That's doing things with the tax bill, okay? We've talked about refundable credits, even after we've eaten the tax bill. That's the money that we're going to get to go on and on with the Energizer Bunny. What we're doing right now is we're going to talk about things that reduces income prior to our calculation of tax. This is kind of our last line before we go into creating our tax, right? When we did exemptions, we already figured out this number. However many are on page 1 that are people on our tax return multiplied by 4,000 gets us our exemption. So in this case, it's a family of 3. Mom, dad, and a qualifying child. We're going to talk about the standard or itemized deductions, okay? Just as a point of fact, the Donald Trump tax plan, all right, will make your life very, very easy, okay? Currently, a standard deduction for an individual is $6,300, and for a couple, $12,600. Under Donald Trump's plan, single person will be $15,000 and a couple will be $30,000. Basic, what's that?
They're not being more itemized.
Basically streamlining the tax code. All right? And then he's going to cap for those people that are in this category that as an individual, you cannot have more than $100,000 in standard deductions, or excuse me, itemized deductions, and a couple's $200,000. Personally, I've never done somebody that has $100,000 worth of itemized deductions. That's a big house, and they're feeling really generous, okay? And we'll talk about that. But we're going to have the standard deduction here, and basically we're going to learn about the standard and how it increases based on a disability or age. We're going to talk about when it's advantageous for a taxpayer to itemize. We'll talk about medical and dental expenses, tax and interest, and charitable is basically the parts that we're going to cover right now. All the things that we're going to talk about itemized deductions are going to be off of Schedule A. Okay? All right. Now the easy way to take deductions is just do standard. Usually the first thing that finds somebody being able to itemize is, do they own a home? Property tax and mortgage interest are the first thing that trigger somebody going over, okay? But we'll talk about the different parts of it, all right? Now, page 11.4. Standard deduction starts out for a single person at $6,300, married filing joints $12,600, and somebody that is head of household is $9,250. But as you look at the bottom of 11.4, the little table there, these are people born before January 2nd, 1951, or who are blind. So anybody that's born before January 2nd, 1951 is how old? 65, okay? So you can see there, we're basically talking about the little things that are up here. So whatever you put on your main information sheet, if they qualify for any of these, that's going to be the number of boxes that they're talking about in that table. Okay? So even if you have one, where one of you is greater than 65, might be a check here, There'll be a number here, and it'll change your standard deduction. So you can see on there, if I'm married filing joint, and one of us is 65, we get $13,850. If there's two of us, okay, we get $15,100. All right. If both of us are blind, so, okay, they're going to give us $17,600. Okay, so you can see how the different numbers increase based on what may be the characteristics there. Okay. All right. All right. On 11.5, it talks about standard deduction on there, and just kind of circles where those adjustments are within the tax-wise or on the tax form. All right. Now, page 11.6, itemized deductions. Okay. Taxpayers must itemize when they don't qualify for the standard deduction. Pretty profound statement, right? If you have a choice of A or B, okay? We are going to, well, the other thing is, married filing separate. What happens there? I know we've talked about it a little bit when we talked about filing status.
One itemizes the other one.
That's right. If one's going dressed as a cat to the party, the other one's got to be dressed as a cat to the party, okay? You got to wear the same costume, all right? So whatever one does, the other has to do. Apples and apples, okay? So you have to do that together. As it talks about when to itemize, generally, like I said, the biggest thing is going to be that mortgage interest and property taxes. But if somebody had a major medical event, we'll talk about if that helps them qualify to do itemized. Or they're a tither to church. You know, they're given 10%. Okay? And the last one it talks about, and then we'll get into a little bit more in the next part, but if there's somebody had a fire at their home or destroyed by the October storm or whatever, depending on what their insurance was, or a flood. We'll talk about that. Okay? All right. So, on the itemized deduction line here, on line 40, we can go over our little box, okay? And chances are, what's in there, Mark?
Oh, worksheet.
Okay, all right, okay? So in this case, we're gonna go take a peek in there, and we got a Schedule A, all right? On our Schedule A, we're gonna start with medical and dental expenses, okay? So any qualified expenses. Unreimbursed, but remember that line I was showing you about adjusted gross income? We have to exceed 10% of our AGI before $1 would count. In this case, area healthcare, 10% is $2,754. If that number read $2,755, he would have $1 of itemized deduction for medical. So the meter doesn't start running until you surpass your 10%. You don't get the $2,755, you get $1. Okay? Obviously, this is a very tough one. We'll talk about what makes this up. All right? Okay. So, we're going to go in to where it says unreimbursed medical expenses. And everything with Mark's favorite, there is a little sheet inside there, a worksheet. Okay? And at the top of that is our medical stuff. It tells us medical expenses. There's qualifying medical. Prescriptions, legally obtained drugs. So here we are back to the whole legal income. So I don't know yet. I have not heard that since if it's medical marijuana that's legal in New York, but you buy because Massachusetts laws have changed and you bring it across the border, I don't know if you get to itemize it. So, okay. You heard that the state police are already concerned about you know, up by, what is it, Lee, Mass? Isn't that the city that's on the border of Massachusetts and New York? They're already concerned because it's now legalized. Marijuana is legalized in Massachusetts. So, insulin, doctors, dentists, nurses, eyeglasses, health insurance premiums. Health insurance premiums, what kind qualify?
Medicare.
Medicare does, but even take it back a step, okay? Stuff that I pay for with what kind of dollars? Post-tax dollars. A lot of times if you have health insurance benefits through your employer, they take that off your taxable income, don't they? So we can't claim that, all right? That's where you have to look at that W-2. If things are in that box 12 for medical, chances are it's lowering their taxable income. If it's in box 14, that means it's money out of their pocket that's post-tax. It's tax dollars, okay? Medicare, as Mark brought up, that's definitely one that comes into play, okay? Non-prescription medical supplies such as crutches, all right? Do not list any amounts paid with pre-tax dollars or reimbursed by insurance or your health savings account, okay? Because if you think about it, when we talk about adjustments to income for health savings accounts, we're kind of double dipping, because if we're lowering it with the health savings account dollars, we can't lower it again by the money out of there, okay? All right. Yes? Oh, no?
No, sorry.
Okay, all right. Caffeine is kicking in, huh?
No, lack of.
Oh, lack of?
Trying to keep away.
In your quick binder, and it's in your textbook too, but there's several pages, in fact, 2.5 of different things that qualify, okay? Let's see here. If you have artificial limbs or teeth, those count, okay? Let's see here. Just to give you a heads up, I think I told you the story of my transgender client. Remember, if you have surgery to go from male to female, okay, I had a client come in, gave the social security number, I typed it in, and it came up as Kevin. Obviously, Kevin was not sitting across from me, and it was a single return. There was no spouse. Kevin was now Carrie, as the driver's license said, and the social security card, okay? So obviously I'm a little confused at this point, but we sorted it out. He had surgery to become her, okay? Doing a little further research, I realized how much in medical expenses this was to this individual, because they went to somewhere in Pennsylvania that has a retreat so that you can do this and make this transition and all the things that go along with it, because they were diagnosed with gender identity disorder, okay? Typically something like that you would think not tax deductible, but because they had gender identity disorder, it can be deducted, okay? I had to do a little research. I even stumped Chris on this one. I said, no, Chris, I think I found something here, okay? So in order for me to deduct it, I had to get a letter from his psychiatrist at this retreat outlining why that this was done for gender identity disorder. The psychiatrist wrote me a 6-page letter. I didn't read after the first paragraph. Once I got what I needed, I didn't need to know anymore, okay? I was done. But I had to inform the individual that everything that was done for them to have the identity of a female could be deducted, but nothing that was, to use a term of buying a car, no extras, okay? You couldn't get the heated seats, that's right, okay? All right? Okay, so basically they could deduct everything, but anything that was cosmetic. All right? So there was no augmentation, I guess would be a better word for it. Okay? However, well, that's some difference. But, so yes, so you have to, sometimes with medical, you got to do a little delta. Okay? All right? Let's see here. Contact lenses. This is one that always throws me off that's in here. Christian Science practitioner. Fees for medical care. If anybody knows anything about Christian Science, what do they not believe in? I don't understand why that one's in there. To me, it's a contradiction. I don't know. Contact lenses, all right? Dancing lessons are non-deductible, even if the doctor says you have to do it.
So you say that, I don't like my contact.
Yeah. Medical? Yep. So, but yes, dancing lessons, that is not. Okay, we talked about dental. Diets. You have to go on a special diet. Okay, those are ones that qualify too. Drug treatment, drug addiction treatment, fertility. Okay, so those are there. Yes. Guide dogs. All right. Obviously, you've seen eye dog, but have you ever seen those little people that are in the store with the little dog in their purse? Anxiety dogs. Okay. Those are deductible. So if you have an anxiety disorder, and you have to carry a little dog in your purse, dog is deductible. That is the only time pets are deductible. Okay? Unless you have a social security number for your dog. Okay? I have heard cases where people have had social security numbers for their dogs. Don't know how they got them, but lodging expenses. This is a big one. We'll talk about mileage. I have a friend, she's in the hospital right now, but doing better. Double kidney transplant. She was actually number 2 on the list in Buffalo until ECMC and the other hospital merged, and she got bumped to number 14. All right, so she had to go to New Hampshire, where her sister was, to Dartmouth Hospital, and they were able to do the transplant. Otherwise, I don't know what would happen. But obviously, her home's in Buffalo. She's up there. She got to stay with her sister, but her husband had to travel back and forth, take care of her. So, lodging and expenses. Okay. Mattresses. Okay. If you can say that you have a special mattress to alleviate an arthritic condition, that is ruling 55-261.
How do you prove that? How does the doctor say?
Okay. Let's see, medical equipment, anything that you would need, nursing care, swimming, only those that is prescribed by the doctor. Okay. What I mean by that, a lot of times with hip and knee replacement, and classes in the water, it's a therapeutic. Television. You can prove that you need a special television because of a hearing impairment or vision impairment. You have to have subtitles or whatever it may be.
I need that 75 TV so I can see it.
Well, nice try. So, okay. We talked about travel, weight loss, and a wig. All right? Because if due to a disease you lost your hair for your mental health, you can write off your wig. Okay? So again, there are those in there. I know in your book it has some in, is that on page 1110? Has a bunch of ones listed there. Okay? But medical expenses. So, insurance premiums paid. This is not pre-tax. Health, dental, cancer, any special policies you might have. Long-term care contracts. Anybody in here have one of those? You can't hardly afford them anymore. Okay, the premiums on them, basically if you think that you're going to end up in a nursing home, you can take out that insurance policy that will pay it. Premiums on them have gone through the roof. It used to be a deal, but not anymore. Okay. Medical expenses. This is where we list things. We don't have to say Dr. Jones, Dr. Smith, Dr. Johnson, my dentist. You don't have to list it like that. We'll see when I do a practice problem. Doctor copays, prescriptions, glasses, dental. We can do that. Medical equipment. Break it down that way. Very general categories. Okay. So that we have that on there. All right. As Mark said, Medicare. If we remember, when you do Medicare, there's that line on the worksheet for Medicare or Social Security that you put your Medicare. It will automatically flow right to here. All right. The other one, mileage. Say you live up here in Niagara Falls, but you have to go down to the new medical campus in Buffalo for all your treatment. Those miles driving back and forth. Or you got to go to PT or whatever it is. Now, granted, it's only 23 cents a mile, but it can add up if you're doing 50 or 60 visits for some therapy. Okay? The other thing that I want to touch on is on page, the bottom of page 1110. Okay? Talks about capital expenses, things that you can write off for capital for medical. All right? Basically, what you're looking at and some things that they list and talk about on the top of page 1111. You know, if somebody's home needs a ramp in the front because they're now wheelchair bound, all right, you can write that off. What you have to weigh is it a capital improvement? Okay? Example, I have a client that somebody else did a return, and I end up doing it now because I looked at it and said, well, that's tax deductible. Her husband had MS and developed it. They put an addition on their house for him to live in. So there was a bedroom and a bathroom as an addition to their house. Now, that addition to their house did what? Increased the value. Okay? So I couldn't write off the whole addition. However, they had to put the little rail thing in the front to get him out of the bed and into the bathroom. The bathroom had the bathtub with the special door. Things like that, you know, yes, it increased the value of the home to them, but somebody else it might not be. Same thing with the ramp. Okay? So those things were deductible. Now, somebody this morning asked, if you put in a bathtub with the little jets in it, is that a therapeutic thing that you can write off? No. Okay, just because you want a jacuzzi in your bathroom doesn't mean that it's for therapeutical. Okay, that's probably a capital improvement because that has a value to somebody else that's going to buy the house. But a bathtub and a shower with a little door on it may not be appealing to everybody. Okay, I haven't decided if I'd like a door on my bathtub or not. All right, so you have to really break those down. Does that make sense? That the capital versus medical need.
Do they change when we talked the other day about capital gains, it changes the basis of the house?
Mm-hmm. Well, it does, the addition to the house raised the basis,
Right.
yes.
Well, I
Okay.
get the whole idea here, but I mean,
The medical stuff doesn't. A ramp on the front of the house doesn't necessarily increase the value of the house.
no way.
If anything, it might detract from it.
Okay, so you save the tax this year.
Uh-huh.
When you go to sell the house, you're gonna, well, their capital gains for a normal person is way up there.
Yeah.
So you gotta worry about it.
Yeah, so, you know, it's one of those things you really, like I said, you got to weigh which one that is, okay? All right. Let's see, we talked about lodging. Some of this has some breakdown a little bit more about some of the things we talked about. Some of the things like nursing services. If you have somebody that's coming in to take care of mom and dad, okay? Transportation, if you have to pay for that, you know, somebody that doesn't have a car, or their car expense. We talked about the mileage. Okay. All right. And then again, we talk on 11:15 about all those things that can't be included. Employee-sponsored health insurance plan, the premium tax credit. Okay. No, just because you had to pay a penalty for not having health insurance doesn't mean you can deduct that as a medical expense. Okay. So Cachet is the one working for Univera, right?
Yes.
So how would you like that phone call where everybody's saying, well, I paid for health insurance. I had a penalty because I didn't have health insurance. No, you cannot deduct that, okay? Kind of goes against it. And then as we talked about the health savings accounts or anything that you've been reimbursed for. All right. Okay. So let's go to 1120. All right. So we're going to go back to our Schedule A. We're going to move right on down. Taxes paid. Okay. This line right here See that $1,000 number? Income taxes. If I go to the W-2 here, how much did this individual pay in state tax? $1,000. Okay, so on itemized deductions, you get to deduct income tax or state income tax that you pay on your W-2. Okay, so that's one of the taxes. All right. You can put that against general sales tax. Okay. The days of grandma bringing in her shoebox of every receipt and every cent of sales tax that she paid in the year are gone. You have somebody come in like that, you're like, oh no, I'm good, thanks. Okay. All right. Or my favorite is the guy that comes in with a 33-gallon Rubbermaid tub. Okay, with the hanging file folders in it, you're like, oh great, here we go. Okay, and the thing is, he pulls out the first file folder, and that's all he needs. The other one's just fluff. It's like he's trying to impress me. I'm like, I believe you. There's receipts and all those. I'm sure they're just filled with blank paper. Okay, all right. General sales tax. There is a little worksheet. Mark's favorite. If you go into the square, hit F9. There's a sales tax worksheet. All right. The top part of this talks about some sales tax that you might have in special circumstances. Never see it. Okay? You're never going to see it. All right. Down at the bottom, we have sales tax for our state of residency. Okay? All right. Do you live in all these different states? If we hit yes, we can deduct the sales tax. Now everybody know what the state sales tax rate is? What's that? 4%. What's Erie County's local tax? 8 3/4. And what's Niagara? 4%. That's where you get the 8. And the 8 3/4 is adding state to the local. Okay? So you can put this in here. Basically what this is, it's a calculation of the sales tax that you pay based on your household's income. All right? If you want to make a note, enter letter A through G for optional local sales tax table you want to use. Make a note. It's B. The answer is B. Okay? A, B, C, or D. Your answer is B. Okay? Local sales tax, what do we say the local is? Either put in, okay? So the rate here for the local general, or local general, and then your state sales tax. So 4 3/4 and 4, or 4 and 4, okay? What it's going to calculate is based on your household's income, what they think you paid in sales tax throughout the year. Now, they're going to put that against the tax withheld from your W-2. Which one do you think is going to be greater most of the time? Tax withheld, okay? The only time you see the general sales tax used most of the time is a retiree. Think back to our 1099s and Social Security. Is there any state tax taken out of those? No. So you're going to use sales tax for them. But a retiree, what do they probably not have in tax? Their star makes the property tax very small, and chances are they have no mortgage interest, so they're not going to itemize. So it's not going to help them. Now, what may help them, however, in certain circumstances, is my next question to them was, did you buy anything new motorized during 2015? Like a car, a aircraft, a boat, a mobile home, okay? RV, anything like that motorized. I don't think drones qualify. Okay, but anything motorized. Now, it does say on here home building materials. But what happens in New York when you have capital improvements with home building materials? Capital improvement, is there sales tax when you buy that stuff? No. Yeah, anytime you have a contract that comes in and does work on your house as capital improvements, if he charges you sales tax, he's robbing from you. Because he's not giving that back to the state. Because there's no capital sales tax and capital improvements. Okay? So, In this case, we can take the tax. So if I buy a new car, I can add the sales tax to my general rate. Can I take the sales tax on a lease? No, because it's chopped up through all the payments. It's not in one shot. All right?
What is it? When you finance?
What's that? Only in finance, yes. Not in the lease. But when you finance, you're paying the sales tax up front because that's your money, kind of like a student loan. In a lease, it's not really your car, plus the sales tax chopped up in the payments throughout the life of the lease. Okay? All right? Or if they're persistent, you can still add all the receipts. Okay? I hope Liz's first client comes in with a shoes box full of things and says, I need you to add up my sales tax. Okay?
Do that when we do
So, okay? So that's the general sales tax. All right, back to Schedule A. You see, you have my Ziploc friend that comes in the Olive Garden bag with the oil stains all over them. Yes. This filing system is Ziploc bags. Stuff them in there, you pull them out, looks like a snowball. Okay. All right. Then we go into real estate taxes. The first two talk about remainders. We'll cover that when we go into home office under self-employment. And we'll talk about that when we go into rental properties. If I own a duplex, okay, and I live in half of it, half the real estate taxes goes on my personal, half goes against my rental income, okay? What we're going to worry about today is taxes under principal residence, the property taxes. Other real estate taxes you pay. I own 200 acres of hunting land down in the southern tier. You pay tax on it. I don't. No, I don't. No, I don't. All right? My hunting days after living in the Midwest are pretty much done. Sitting in a tree waiting for an animal to walk underneath me just isn't my idea of excitement. Okay? It's like my friends that still like to ice fish. That's another thing. I'm not going to sit and watch for a fish I can't even see to get on my line, right? Personal property taxes, like I said, the other thing on the remainder, all right? So we have those, okay? And again, it's taxes you paid. If I get somebody comes in and they hand me a property tax bill that doesn't show paid, and I don't see it on the escrow, can I deduct it? No. So if they're overdue on taxes and back taxes, they're going to have a year where they're probably going to itemize when they catch up. Otherwise, they're probably not going to go home. Okay? All right? So we have that. Okay? All right. Okay, so that is all the different taxes there. And the real estate taxes. Property taxes. Okay. We're going to take 5 minutes. I didn't make coffee, so you're going to have to figure out what you're going to do there. All right, so we've done taxes that we've paid. Now we're going to go into interest that you paid. Okay, so again, we're on the Schedule A. The first part works just like we talked about with interest. Parts of it are from home office, or if we've paid interest on a mortgage on a duplex and we live in half of it, that's where we'll have half of it there. Or we have interest on a Form 1098. If you take a look at page 1135, you'll see a 1098. Okay. You can see on there that there's a box 1 for mortgage interest, a box 2 for points. So if you pay points on your mortgage to get a better rate, that is included as interest. Okay. So we have that on there. A lot of the statements that you get for mortgage interest will look like this, with the exception of Citibank and Wells Fargo, and then it becomes a seek and find. All right? They like to hide it on the back of the first page, just to kind of give you a heads up, especially if you have an escrow with real estate taxes. I don't know why, but it's got to be hidden on the top of the first page in the back of it. It's the only thing there. Okay? So a lot of times those will have the tax on them. But we have the interest that we paid, okay, on that. Home interest mortgage not recorded on the 1098. This is the case where you'd have to list. If I have somebody that I'm buying a house from, I have bad credit, they said that's fine, I will hold the mortgage, you make the payments to me. Okay, so I'm making mortgage payments to a private individual. Why do you think you need all this information? What's the IRS looking for?
Make sure that they can find it on that.
Yeah, they got to claim the interest income for holding the mortgage, okay? Again, I don't know why, but Akron had a lot of these. Indian reservation. Indians cannot own land. A lot of mobile homes out there. And there's one guy that charges like 18 to 20% mortgage rate on these mobile homes. So, which, yeah, if you have a mortgage, 18 to 20% sounds like a lot, doesn't it? So, he lives in Florida and he must be living very well, okay? The other thing, PMI, or mortgage insurance premiums. You can deduct those as taxes paid. All right, so based on your age or what you did for a down payment or whatever, some people for the first few years have mortgage insurance premiums because they're typically a risk, okay? But you can deduct those, all right? Home equity loans. If the collateral for your home equity loan is your home, that mortgage interest or that interest on that home equity can be deducted too. The other one is mobile homes, or excuse me, motor homes, all right? If I have a camper. Now, I'm not referring to a pop-up that you pull behind your car. That would not qualify as interest, mortgage interest, all right? But if I have a large camper that has bedrooms, bathroom, kitchen, basically somewhere I can live, that interest is deductible, okay? The IRS sometimes will ask you to prove it, and I've had a couple of cases where I've had to tell the person, take your cell phone, go take pictures. I need a picture of the entire camper, the bedroom, the bathroom, and the kitchen to prove that they can live in it, okay? I had one client, I asked him to do that. They went and took a picture of it in the winter storage with the cloth over it. I'm like, that doesn't do me any good. I know that there's a camper underneath there, but the IRS needs to see it. So they did climb under the cloth and go inside to take the pictures, but the picture they brought me of the camper was the camper covered in a cloth. So I guess I had to believe them. All right. So we have all those as far as our interest that you paid. Credit cards. Can I deduct it? Interest on it? What about my car loan? I can take the sales tax, so can I take the interest? On my car loan? No. Personal loans like that? No. On the interest. Has to be something tied to the home. Okay. All right. Okay. We have next charitable contributions. All right. So moving right on down, gifts to charity. Looks pretty simple. Gifts by cash, other than cash, or something we carry over from the previous year. Looks pretty easy, right? Okay. However, we're going to go into our detail sheet. Remember where we were for our medical? So if you got that on your tree, the A detail worksheet, we're going to go down to the bottom. And we're going to talk about cash contributions and other than cash. Cash contributions, what's probably one of the most popular? Church, okay? Anything that you give for cash, all right? How about if I buy raffle tickets for the Fireman's Meat Raffle? They're a nonprofit. Why? No, not as much gambling. Think even farther. Why would I not be able to deduct that?
Because you're actually trying to get a benefit out of it.
Exactly. I'm going to get something in return. So am I really doing charity? No. I know it's a fundraiser for them. Now, somebody this morning asked, what about the turkey dinner at church? Thanksgiving dinner. Well, if you're paying $20 for the dinner and it really was only $10 in cost, then you could take $10. Okay? What's that? It's kind of like Boy Scout popcorn. Coming in here buy Boy Scout popcorn. How's that $20 bag of caramel corn, is it good?
It's like $4 at the store,
Okay, so what do you know if it's $4 at the store?
I guess, yes, $6 gain on it.
Yeah, and where's that $16 going? To charity. So if you hear the rationale there, when you pay $20 for that caramel corn, but you know that it's a $4 bag at the store, that means there's $16 going to a nonprofit, the Boy Scouts. Same thing with Girl Scout cookies.
I'm gonna have that in that.
So, my Girl Scout cookie addict?
And
Okay. Girl Scout, that's an expensive habit now because there's only like 5 cookies in each one of those boxes anymore. So,
they're like $5 now.
and the Thin Mints, I was so disappointed last time. I hadn't bought Thin Mints for a while because I used to love them, throw them in the freezer, and then have them on ice cream. They're about the size of a Lifesaver now.
Are you ready for the dangerous thing I'm gonna tell you for ice cream man?
A what?
The dangerous thing I'm gonna tell you,
About what?
that there is an ice cream. It's called Girl Scout cookie Thin Mints. And it
That's not the
comes with
same.
Thin Mints in it. Well, you mean it's not the same, it's better than the same.
But see, the thing is that, but that's the thing. The mindset is with all those calories I've been taking, if I have to do a little work for it, I've burnt some calories before I eat it, okay?
Wrong mindset, sir.
Yes, Mark.
What do you tell people that come in with some that they think they're gonna write off half of a raffle, or not a raffle ticket, but a turkey dinner?
Well, I have to say to them, do you know what the cost was? You know, in a turkey dinner, a $20 individual turkey dinner, if you went to a restaurant, well, it's gonna probably cost you 12.
It's like a fair market.
Yeah, so you gotta kind of, you know what we talked about, exactly what Noel said about fair market value.
But you actually go through this one?
I would ask, especially the raffle ones. You know, it's real popular for people to bring all the raffle tickets because they're doing the gun raffle, the meat raffle, all the volunteer fire companies around here, all those raffles. Thing is, though, if they're getting something in return, can't deduct it.
Well, what if you don't win?
Just take the free food insurance.
If that was the rationale, Brian, then you could write off all those scratch tickets you bought, no matter if you won or lost. Okay? So cash contributions. All right. So we talked about all those churches there, things like that we give to. Okay. Charitable miles. I can write off the miles when I am volunteering. All right. I was a coach for my son's soccer team. And I wrote off all the miles for all the tournaments, including driving to Williamsville, Virginia, and Kansas City, all the different tournaments he played in. Should I have done that?
I don't think so, but why not? It's not-
Volunteer. I wasn't being paid for it.
That's what I'm saying. Are
Does
they
it go to
tax exempt?
an actual charity?
What's that?
Are they a I don't know what exactly you call it.
Tax exempt? Yeah, they're nonprofit. So can I deduct it?
No,
No, it's
I don't think
personal,
so.
Why is it personal?
your son.
Yeah, I'm going to be there anyway because my son's on the team. Now, if I was truly a volunteer coach, would I have a child on there? No. Boy Scout leaders, if they're a leader for Boy Scouts and they do not have any, family or relative tie, where they would be there anyway, and that's volunteer in the eyes of the IRS. Okay, not just because you're not compensated, but you have to say that you're going there because you wouldn't typically be there. All those things, even though I was starting out, I did not like soccer.
What if, okay, your son played soccer.
Mhm.
So you played for 4 years, and then you kept being the coach and he's still playing.
Yeah.
So then you would be.
I'll be a true volunteer there. Yep.
Plus,
I volunteered, I coach a K-2 basketball team too. I wrote that up.
Do you have any kids in that?
No,
No. Your miles going back and forth?
quite good actually.
Do you buy them uniforms?
No, I don't, that all comes from the school, but I coach.
You can't put a value on your time, but your miles, yes. Okay? You can't put any value on your time that you're volunteering. So you can't say, oh, I'm a great coach. They should be paying me $1 million a year.
I'm actually a lousy coach, so I have a good time.
So K-2, it's just kind of ordered chaos, right?
You'd be surprised.
Yeah, I know.
They scored 25 points.
Yep. I'll never forget when I coached my daughter's kindergarten soccer team. I said it was like watching ants fight for a crumb at a picnic because everywhere the ball went, everybody went. So, all right. All right, so we have our gifts to charity there. Okay, we're talking about cash contributions. Okay, one thing about cash contributions is record keeping. Make sure you have receipts. That's why you want to write checks, credit cards, things like that. Give online, print that page out. You have to have a record. All right, you just want to make sure that there's a paper trail.
I have a question.
Yes.
It says a charitable contribution is only when you don't get or expect anything of value. But if you're keeping receipts and you're planning on using these as a deduction on taxes,
You're getting
isn't
something
that
in return.
expecting something in return?
Yeah, you're kind of splitting hairs there, but you mean you're expecting a deduction?
Yeah.
Well, yeah.
You're
Yeah.
basically getting a tax break for donating. So it's not really like.
That's why a lot of people donate.
Give this to you.
You sound like my client that's an art history teacher, and we go round and round every year. Because she takes vacations to some exotic land, and she always tries to write off everything that she does.
They kept that because of teachers.
What's that?
They kept that amount because of.
Oh, it doesn't matter.
No, but no, she
She's
can't.
having a, I don't care if she rented the Jeep to go see the lost pyramids of the Aztecs in the middle of Mexico. She's on vacation. I'm not letting her write it off because she's taking
Well,
pictures.
they keep business vacations as a teaching thing. It's.
She would have to be there the entire time for this. And I asked her, I said, is that all you're doing? Well, no. I'm like, well, then forget it.
Yeah, but then it's not a law.
What's that? Well, she got a portion, but she wanted to write the whole thing off for vacation every time. The other one that was my favorite is she was somewhere down in Florida. She bought a tapestry and she wanted to write off the miles to get home. But she went to Louisiana, South Carolina, and New York on her way home to see relatives. And she wanted to write all the miles off. I'm like, she goes, but I drove the tapestry home. It was a rare tapestry for my class. Really? Then tell me what the distance is from point A to point B in a straight line, and then we'll
If she had
talk.
gone straight home, she had.
I would have had a little bit more of probably a little, I would have been a little nicer. Okay, but when she was trying to write off the little zigzag trip home, no. What's that?
What about holding base? You have that business, personal business, and it's all there.
It has to be directly related to the business and generating income. Yes.
I'm probably just piggybacking on what she just said, but like airfare things, like let's say you got a rental property in Florida or something.
Mhm.
That counts, right?
Oh, yeah. Yeah, going down there for business. Yep. Yep. Travel. So, and we'll talk about all that when we get into things. But yes, that just reminded me of that when Liz was trying to write off that she was expecting a refund because of her charities.
No, I would say they shouldn't be able to write it off because not technically not accepting something. You are, you're planning on writing it off, so it doesn't count as.
That's how you should do it.
So we should volunteer for you for Mr. Trump to help him write his new tax laws. Because nobody would get to deduct anything, would they?
Well, I mean, certain deductions are paid, but the
Okay.
charitable ones,
I know.
they say very clearly you can't expect or get anything out of value, and writing it off on taxes is technically a value.
I agree.
You know,
And why do you think that they're talking about raising the standard deduction so high?
But if you don't mind,
So you
then
don't
you don't
have
need it.
So nobody itemizes, so you don't have to worry about it. All right, other than cash contributions. So if we give, other than cash, what are we giving? Goods. Okay, property or goods. Okay, all right. And as it says here, we have to use this form 8283 if it's more than $500. Anybody ever given a card, speaking of Veterans Day, anybody ever given a card to the veterans? What's the minimum value they put on it? 500. It's always $500 or more. But, you know, if you just donate the card, it's $500. Okay? Reason being, let's go take a look at our 8283 form here. Okay? So down here it says from forms 8283. I got my $500 there from this morning. Page 1. If I give more than $500 to a charitable contribution or charitable organization, I have to give a little more information. Name and address of the organization. Trust me, by the time you're done with these $500 ones, you're going to know the address of every Goodwill, Salvation Army, and St. Vincent de Paul within 100 miles. Okay? What's the second one show? If I give a car, I'm going to get a little 1098C. I have to know the VIN number, make, model, and mileage. And also on these, say that Grandma or Aunt Gertrude decides to give her AT&T stock to the church. All right? I basically have to itemize this a little bit more, okay? So I'm going to have to do in there. Now, typically, if they give over $500, say somebody's moving, you know, Grandma passed and we're emptying her house and giving it all to, you know, Goodwill or Salvation Army before we sell the house. Well, over here, for a description, you can just put clothing and household goods or household items, okay? That's all you need for the description.
Now, how do you put the value on that?
Yeah, funny you should ask, okay? All right, down at the bottom. If anything that's a deduction is 500 or less, you don't have to complete these columns, all right? So, date of donation, when did I give it? Date acquired. You know, if you're giving away Grandma's closet full of dresses, yeah, there might be some in there from 1957, so we're not going to worry about that. How acquired? Purchased. Okay? Donor's cost or basis and the fair market value. Those two columns, okay, we'd have to find out and check Grandma's checkbook and see how much she paid up for all of her dresses, right? And add them up?
Yeah.
Do you think that sounds fair?
No.
Okay. What I typically do on this, and it's fine, fair market value. All right? If you take a look at page 1145, what's on there? That the IRS requires donors to value their items. Goodwill Industries has that little list there. So I can put a fair market value. Best example, if I go down to t-shirts, it says $1 to $6. Okay? If I'm writing off a $1 t-shirt, I tell everybody, chances are you just gave somebody a rag to wax their car with. Okay? $6, it has some value in a thrift shop that it would sell. $1 ones, you know, if you're buying a bunch of $1 t-shirts at a garage sale, what are you probably going to do with them? Wax the car. Okay? All right? Okay? So that's where, and you can see on all these, they have different values to things. Don't get a lot for stuff. Two-piece suit. You know, I don't know many places I can buy a $30 suit. So obviously the values decrease. The one I do want you to notice is if you go over to 1146, the next page, take a look at computers, monitors, printers, computer systems. You got a pretty good value to them, don't they? So when they have those little things for the schools or Sunshine Park or whatever they call them or whatever, that you can give your old printers and computers, and you can write them off as a charitable, if it's for a charitable state. Why the value? I know.
Silver.
Yeah, the gold, silver, platinum. They got precious metals. They're not taking them for the computers. They're taking them to a place, ripping them apart, and melting down the metals and selling them, making good money. What's that?
They usually have free labor. That's what a lot of disabled organizations.
Exactly. Yep. You know, that's so. You guys ever been? This is one of my friends growing up. You ever been in the convenience store and you see those little yellow things that say little drugstore? You can buy like 2 Tylenol or 2 cold things. They're called little drugstores. Friend of mine. Okay. Has a warehouse in Cedar Rapids, Iowa. And that's what his labor force is. Around it, he has built houses, kind of like People Inc. would. And he allows these people to live there. Provides very nice living quarters for them. But he has this huge warehouse of about 10,000 square feet, and that's his labor force. They sit in there and just put those little things in those little trays. And he makes a killing. So, not that it's not like slave labor. He pays them very well and provides living things for them. But yeah, that was just his way. He gives back. But it's one of those things you're thinking, I mean, really? You know, selling 2 aspirin, a little thing that says little drugstore? So I told him, I said, you know, I need to be your next idea. Okay? So we have charitable on A2, A3 down at the bottom. What I do for donors cost or basis, I figure out my fair market value and I divide it by 0.3. Why would I do that? Mm-hmm.
Makes it bigger.
Yeah, makes it bigger, obviously. But what's that 30%? Look down at the bottom. See where it says 30%? If I have something that's going to be on a capital gains category, it'd be above 30%. Okay? Basically what we're doing, and everybody always asks about what the difference between the 50% and the 30%. If we go back to our little detail worksheet, all right. First thing I want you to notice, if contributions exceed 20% of the adjusted gross income, list each contribution in the proper category, the 50, 30%, okay? Well, if you got somebody making $50,000 and they're giving $10,000 or more to charity, probably gonna have to ask where it's coming from, and probably some of it's gonna be handled a little bit different. They're not gonna get a dollar for dollar, okay? The other thing is, with the 30%, non-cash, capital gain property and the fair market value is equal to or less than the cost. Basically what I'm saying, Aunt Gertrude dies and she wants to give the house to the church. All right? So really, which is greater, fair market value or cost basis?
No, fair market value.
Fair market value, okay? She bought the house for $50,000 and the market value of that house that she gave the church is $100. Okay, really tough to write off because she's given something. Or like I talked about earlier about the stock. Think about your basis versus what the value is.
So it's the basis on which she purchased it, not the basis on which she dies.
Well, yes, but with the fair market value, okay,
Because it's an estate, it's not like a tricky thing.
you're getting a whole nother stuff. Don't worry about that, okay? All right? Because if it's donated through an estate, that's handled different on an estate return. It's not on the person return, okay? We're just kind of using examples for the basis and stuff, all right? Yeah, don't throw the estate stuff in there.
All right.
All right?
I thought.
No, that's okay. We'll handle estate returns differently, okay? Because who pays the tax on the
Well, it's either
contribution to the
the
house?
estate or it's the person that's from, but yeah.
Yeah, most of the time the estate's going to pay tax on it, okay? But this is a case where there's not an estate done and there's something that is greater fair market value than what you have into it, okay? Somebody asked this morning, it was a good question. Collectibles, okay? Yes, I would say that if you have a Van Gogh painting that you're giving to somebody, chances are the basis is a lot less than the fair market value. Because Van Gogh probably sold it for 2 bits in the marketplace. But now it's worth millions, okay? Another one is collectibles. First one that comes to mind is baseball cards. Very hard to determine a basis unless you can track it back with your receipt to the dollar bubblegum Bazooka Joe where you bought the Babe Ruth card. And the fair market value, you're going to have to find somebody that pays something for similar. Because collectibles are really based on, you know, it's got to be worth something to somebody that wants to buy it. You know, that's one of the things about collectibles that's tough, you know, contributions. Finding the basis and finding the fair market value. I'm not a baseball fan, so the Babe Ruth card's not going to mean anything to me. I'm not going to pay $10,000 for it. Okay? All right. All right, so we have those, okay? And that is our endpoint of itemized deductions part 1. So we did medical, taxes, interest, and charity. Okay? All right. So